You will be joining the meeting muted. If you have any questions, please use the Q&A button at the bottom right of your window, and your question will be read by one of our panelists. If you are experiencing audio issues, please make sure you are connected to the computer audio. If you are joining by phone, the number is in our chat panel. And now with some opening remarks, we have LISC NYC's Executive Director, Valerie White.
Hi, and good afternoon. Thank you so much for joining us this afternoon. We are incredibly excited to have the opportunity to talk to you about what we're doing at LISC New York City in relation to lending. So let me just tell you a little bit about LISC. First of all, I am Valerie White, Executive Director of LISC New York City. LISC is the Local Initiative Support Corporation, and it is a national nonprofit community development financial institution. And we equip underinvested communities with capital, strategy, technical know-how to be places where low, moderate income, underrepresented populations and communities can thrive. We stand everything we do on a platform of racial and economic equity and are incredibly proud to be part of the recovery effort concepts for New York City. LISC New York City, of course, is the first office. It's the flagship office. It was opened in 1980. And over the past 40 years, we work with our local partners, many of which are on the phone, many of you, to be sure that we are providing services and capital to create a more equitable, inclusive, and sustainable New York. Today, you'll be hearing from our lending team to talk about the capital investment that we make in the communities that we serve and through our partners. And we're very happy to have the opportunity to present our lending team to you. So with that, I will ask you to enjoy. Be sure to ask questions. We're here for you. If you want to know a little bit more about what we do, you can look on our website, which is lisc.org/NYC. We will put it in the chat for those who need access to our website. And with that, I will turn it over to the Director of Lending for LISC New York City, Arturo Suarez. Arturo.
Thank you, Valerie. And good afternoon, everyone. Welcome to the LISC New York City webinar we call Pre-Development to Permanent Financing. During this webinar, we will be talking a little bit about LISC New York City's lending platform, what it can offer to potential borrowers. As Valerie indicated, my name is Arturo Suarez, and I am the Director of Lending for LISC New York City. Let me begin by saying that the main purpose of the session is to provide a general overview of the lending products that LISC New York City currently offers, along with some specific examples where these products have been used. Today's presentation will also be facilitated by my colleagues in the LISC New York City lending team, and they include Brock Williams, Janet Lorne, and Mai Chang. We're also going to hear from the principals of some of the entities that have recently borrowed from LISC New York City, including Peter Madden from the Joint Ownership Entity, and Randy and Roland Powell from Infinite Horizons. I would also like to point out that the session is not intended to provide a complete and detailed description of each and every product available through LISC New York City. For that, I ask that after the session is finished, you can reach out to me or any of my colleagues in the LISC lending team. We'll be more than happy to have a more in-depth conversation with you and address any questions you might have about our lending products. Having said that, we anticipate having a little bit of time at the end of the presentation to address any questions which you might have. The names and headshots of myself and those of my colleagues are shown both on the slide you're looking at, but also at the end of the presentation with our respective email addresses. And now, without further delay, let's get started. So LISC has been around for 40 years, and in that time, as you can see from this slide, it has provided or invested nearly $22 billion, leveraging about $65 billion in its various activities. Some of the thresholds include 419,000 homes being either developed, newly developed or preserved, 70 million square feet of commercial space that includes childhood centers, grocery stores, healthcare centers. That has resulted in LISC building its balance sheet to nearly $375 million, $374 million of total net assets. And it should also be pointed out that in 2017, LISC was the first CDFI that was given a rating by one of the major rating companies in the US with a AA rating stemming from a $100 million bond issuance. LISC can products cover a wide range of not just types of products, but also the kinds of projects that it can finance. This current slide gives you a good sense of the types of areas that we're involved in. We can do pre-development financing, acquisition loans, construction, mini permanent, bridge financing, working capital, and various types of lines of credit. The facilities that we have been able to finance include various types of community facilities, commercial and industrial space, charter schools, mixed-use buildings, various economic development projects, and affordable housing, which LISC is most famous for. The slide that you're looking at now, it could be a little bit overwhelming in terms of the information. I wouldn't want you to spend too much time looking at it right now, but it basically lays out the types of financing products that we can make available, some of the uses, and some of the basic terms and conditions under each one of the categories of lending product, including the types of interest rate, terms under each category, the type of project that have been financed under each category, and some of the guarantees and fees that are associated with each one of those loan products. And now what I would like to do to talk about one of those loan products and a particular project that LISC has financed is pass it on to Randy and Roland Powell. And they will talk about their interaction with LISC, as well as the project that they've approached LISC for assistance on. So Randy, Roland.
Good afternoon, ladies and gentlemen. Good afternoon, Mr. Suarez, Ms. White, and the rest of the LISC camp. My name is Roland Powell. This is my partner and my brother, Randall Powell. We are Infinite Horizons, the co-founders of a minority-owned real estate development company based out in Jamaica, Queens. I'd like to take this moment to thank LISC for hosting this seminar and to allowing us to speak on our project based out in the Bronx. So 784 Cortland Manor is an infill site that was awarded to Infinite Horizons through HPD's WMBE Round 1 Awards. So 784 Cortland Manor is a 20-unit, 7-story masonry building, new construction, ground up, based out in the Melrose section of the Bronx. It also has a green roof component, some P-TAC component, and also a second-story open space for tenant use. So 784 Cortland Manor also has a 30% to 60% AMI component, and also a 5% 5% homeless component. So it also has a community facility that's about 6,500 square feet, elevated 2-story, and also a ground level commercial facility about 2,500 square feet. So the total size of the project is about maybe 33,000 square feet. Total cost of the project is just a little bit under $16 million. So also, I like to take this time to thank LISC again, because they have already invested $250,000 in pre-development funds to help our project in the Melrose section of the Bronx. And I'd like to thank Arturo, Ms. White, and everybody at the camp from LISC for giving us the opportunity and the platform to speak on our project. Thank you, guys.
And just to further go into the pre-development loan, we approached LISC in 2018 for a pre-development loan. The total pre-development cost for the project was $500,000, a little bit north of $500,000. And we needed the additional funds because we had about $150,000 of additional environmental costs associated with the project. This infill site had an E designation, so there were other requirements that we had to fulfill to receive permits, as well as go through the mayor's office. Some of those reports included RASP and noise reports. So LISC pre-development loan actually helped bridge that gap for us to be able to provide the additional financing necessary in order for us to get the project to the stage that it's at now, which we'll be applying for tax credits in the upcoming financing round. Working with LISC has been a pleasure, to say the least. Their ability to understand the nuances of affordable housing projects, the timing that's necessary to get these projects to loan closing, their ability to be flexible, especially when it comes to financing. As you know, financing is challenging, especially for organizations like ourselves, emerging MWBE developers, but being the fact that LISC is a mission-based organization, they understood that this takes a lot of time to get to the finish line. And this financing that they were able to provide in form of pre-development really helped push the project along and get it to the stage that it's at. So the financing with the pre-development really helps us out in terms of, you know, one, building a relationship with LISC, since this is our first loan product with them, and two, also puts us in a position to, of course, go back to them and look for additional financing. So again, we'd like to thank everybody, the whole LISC team, for inviting us to talk about this project, and we look forward to an ongoing relationship and are reviewing the rest of our development pipeline for further projects and further financing options. Thank you.
Sure, that next slide here. Thank you, Randy and Roland, for providing us with a little background information on Infinite Horizons and the Cortland Manor project. It has most certainly been a pleasure working with you both as well through all of your processes here. My name is Brock Williams, and I'm a Community Development Officer with LISC New York City. And on a previous slide, Arturo had mentioned some of the various LISC lending products that we offer. This particular project on this slide, 6266 West Tremont Avenue in the Bronx, is an example of a LISC construction loan with a NYCER's permanent loan conversion takeout. This project and LISC's subsequent financing is also a great example of how LISC's flexibility and commitment to its mission has helped to get the construction of this development back on track. 6266 West Tremont is being developed by a long-standing LISC partner, Belmont Arthur. The project consists of a 90-unit affordable senior and supportive housing rehab. The rehab work on this development, which began in 2017, had stalled when structural issues were discovered and construction was halted by the city's Department of Buildings. As a result of the construction delays, additional costs became apparent, and that's when the National Equity Fund, who is an affiliate of LISC and a low-income housing tax credit syndicator, approached us about the possibility of providing a construction loan for the additional and previously unknown structural costs associated with this project. One of the main reasons NEF was asking LISC to step in and provide this additional financing was because the West Tremont property was actually part of a much larger comprehensive rehab project, which included 3 other LIHTC properties within Belmont Arthur's portfolio. The West Tremont Avenue property was the only non-LIHTC project involved in this comprehensive rehab work. And ultimately, LISC was able to work with the borrower and NEF to understand the unique and critical financing needs of this particular development. This construction loan assisted with the LIHTC conversion for the 3 additional Belmont Arthur properties. This loan enabled 6266 West Tremont Avenue to be a standalone rehab project, and it enabled the other 3 developments to convert their low-income housing tax credits to permanent debt and begin their fully operational phase. The LISC construction loan size for this project was a little more than $7.9 million. And although this loan size is still within LISC's maximum lending amount, LISC asked the Nonprofit Finance Fund to be a participating lender, financing a small portion of this loan. So although one of the previous slides shown outlined all of the LISC's maximum loan amounts, we oftentimes can go a bit higher with the help of a participating lender. But for all intents and purposes, the borrower will only be interfacing with LISC and will only have one singular loan with LISC. As I had stated, this project, following its construction completion, will convert to a NYCERS permanent loan, and my colleague Janet Lorne will further discuss the NYCERS permanent financing in a little more detail on the next slide.
Janet, you're on mute.
Geez, thank you. That's because I listened to Ian in the beginning. Okay. So Brock mentioned that, as he mentioned, that LISC is an originator for NYCERS pension funds for long-term permanent debt. It's for affordable rentals and affordable co-ops. It requires Sony Mae mortgage insurance protection, and therefore the underwriting required is generally following Sony Mae guidelines. The pricing is typically 5.25% all in. So it's a 4.75% base rate, 25 bips to Sony Mae for the mortgage insurance protection, and 50 basis points as a servicing fee. Although the rates are posted to change, I have not seen it. It's been very stable. So typically 5.25 would be the all-in rate. 30 years self-liquidating. The underwriting requires a 1.05 minimum, but that's not a DSCR. That's an income to total expense ratio. So just a little bit different than a DSCR. 90% occupancy for 90 days. And they're generally looking for 20% of the loan amount to be used for new renovation costs. There's a rate lock here that goes for 24 months, and extending the rate lock is a flat 1% per annum. It gets prorated monthly, 6-month extensions at a time, and then the fee is prorated monthly. There's no origination fee from NYCERS, but Sony Mae has a 1/8% upfront application fee, and LISC normally has an origination or conversion fee. So it's a pretty dependable long-term permanent product, and feel free to contact us if you're interested.
Thank you, Janet. I want to point out just very quickly, in the prior slides, there were 3 projects mentioned there that had a or have a NYCERS permanent takeout that LISC have worked on. This next slide gives you a broad overview of the New York City Acquisition Loan Fund. Why are we presenting this information is that LISC is also an originator of the New York City Acquisition Loan Fund. The fund was started nearly 15 years ago. The current slide gives you a broad view of the type of housing that that the fund has been able to finance and can finance. It gives you a geographic breakdown of the lending that it has done by borrow, the type of units by AMI that it has financed, and also the type of units within each type of housing category. And what we have here is a quick overview of the kinds of rates and terms, as well as the performance of the Acquisition Loan Fund, and also of LISC's participation within the Acquisition Loan Fund. The interest rate currently for the Acquisition Loan Fund is approximately 30-day LIBOR plus 425 basis points. The term of the fund now can go for 48 months with 2 6-month extensions maximum for a total of 5 years. The origination fee for the Acquisition Loan Fund loan product is anywhere from 1 to 1.5%. The legal fees are determined on a case-by-case basis, so it's difficult for me to give you a guesstimate of what they could be. And lastly, LTV. One of the great advantages of the Acquisition Loan Fund is that the loan-to-value can go up to as high as 130% of the asset being financed. Since inception, the fund has done approximately $520 million of loans, with 14,000 units being developed as a result of it. $123 million are currently outstanding in loans with the fund, with 1,900 plus units being associated with it. LISC has done 12 loans, has originated 12 loans under the Acquisition Loan Fund, with 1,300 units being financed. We've done $53 million in total LISC originated loans, and we currently have $6.5 million worth of loans that are currently active within the fund. So again, LISC is the Acquisition Fund is another, even though it's not a LISC balance sheet product per se, we are an originator, and it's something that we can offer our partners. And now I want to throw it back to Brock Williams, who will talk about an example of a project where the Acquisition Loan Fund came into play. So Brock.
Sure, thanks, Arturo. This next project here shown on this slide, the Rockaway Housing Development, which was sponsored by the Bridge, serves to highlight acquisition and pre-development financing, which utilizes the resources of the New York City Acquisition Fund. The New York City Acquisition Fund is co-managed by Enterprise and LISC, with Forsyth Street Advisors serving as the fund manager. The Bridge utilized a New York City Acquisition Fund loan to acquire 5 tax lots in the Brownsville section of Brooklyn. The Bridge has gone through a very extensive ULURP and DOB process to have their site rezoned for new construction of an innovative mixed-use design, which will incorporate light manufacturing with residential. Combining light industrial with residential is not a typical mixed-use project, and therefore the Bridge had a lot of health and safety zoning design hurdles to clear before receiving approval. From the start, the New York City Acquisition Fund had always known this was a non-traditional project, which could potentially take a bit longer to get through its development process. However, the design process took quite a bit longer than anyone could have anticipated. The original New York City Acquisition Fund loan had a 24-month term with a maturity date of October 2019. And although we do now have our sights set on a construction closing date and takeout, the New York City Acquisition Fund has been the epitome of patient capital here in this scenario. Understanding the hurdles this project had to overcome with its complex design and delays as a result of COVID. The New York City Acquisition Fund has worked with the borrower at every step of the way and has extended the loan and its maturity date accordingly. While the New York City Acquisition Fund is a lender, it is ultimately committed to the success of the projects it finances. When completed, this mixed-use development will have created 160 units of supportive and affordable housing in 154,000 square feet of residential space. The development will have 40,000 square feet of manufacturing space and approximately 4,500 square feet of community space. At current time, the bridge has partnered with Greenpoint Manufacturing and Design Center, a nonprofit developer of industrial space in New York City, to sell a major portion of the industrial space and develop it into a multi-tenanted manufacturing layout. But for the next slide will be presented by my colleague, Mai Chan, and we'll discuss LISC's economic development financing.
Thanks, Brock. So as you can see, as explained by my colleagues here, we have a plethora of financing products for affordable housing that run the gamut at every single stage of development. So if if you have a project that you're looking at, please come talk to us, and come talk to us at any time. Even if you think that construction is still a few years out, I think that we're happy to have those conversations and help you strategize. I also wanted to mention that the slide deck that we have here, I know we're going through it quickly, so it's hard to read every section that's in it, but it is downloadable from the WebEx platform right now, and we will also try to share this out after the event, so you'll be able to look at each of the slides in detail. I'm probably the newest member to the lending team at LISC NYC. My name is Mai T. Chang. I am the senior community development officer for economic development. So I'm going to talk a bit about our economic development portfolio. I know that folks are familiar for the most part with the affordable housing work at LISC NYC, but our economic development lending is actually pretty sizable. We have 189 loans out at the moment, which represents over $168 million. And just to give you a sense of how that fits into the rest of our portfolio, we have a total of $500 million outstanding at the moment. So this is about a third of our portfolio. Our average loan size is $1.5 million. And then I want to talk a bit about the product types, because folks frequently ask me, what is economic development, or what falls into that rubric? And I would say that at LISC NYC, we think of it very broadly. We are a CDFI, we're interested in the charitable purpose of each project, and we're interested in the job creation, particularly if it is within low and moderate income communities. But if you have any doubt, please come talk to us and we can figure out whether or not it's something that falls within that umbrella or not. I will say that we have done lending to arts organizations, theater organizations for their spaces. We've done lending to maker spaces, commercial industrial spaces, and we've worked with nonprofit organizations to look at their office space, and we've looked at co-working spaces, and then finally we have been increasing our work around small businesses. You saw this slide earlier at the top of the hour when we were talking about affordable housing, but I want to point out that under project type here, we have a long list of project types, right, including arts, charter schools, childcare, commercial real estate, community facilities, health facilities, and nonprofit social enterprises, as well as small businesses. So to be clear, the products that we provide in pre-development, acquisition, construction, these are all products that we can also provide for commercial spaces as we think about economic development. I want to point out specifically that a lot of organizations that we work with do get financing from the city, and so we provide bridge loans, knowing that those capital grants can take a while to actually start rolling. We do lines of credit, we do mini perm and perm loans, as well as working capital. And then just a brief note on our small business lending products as well. We do small business lending. They tend to go up to $500,000 when there isn't some sort of real estate attached to it. And so those can include working capital loans, as well as leasehold improvements, and FF&E. And then we also have some of the more traditional real estate loans that we do, the acquisition and construction loans for maker spaces, and commercial real estate. And the two things I will point out for small business lending is that we will require personal guarantees for for-profit businesses, and we'll also be looking at credit. And then with that, I wanted to introduce Peter Madden. He is the executive director of the joint ownership entity in New York City. And he's going to talk about, particularly innovative use for our capital within the economic development umbrella.
Thanks. I'm Peter Madden. I'm the executive director of Joe NYC. Joe is a collaboration of 11 different CDCs in New York City who own and manage affordable housing. One of Joe's goals is to lower operating costs within our portfolio of 2,200 units. So the project that we brought to LISC was kind of out of the box, and it is financing the installation of solar panels at 19 rooftops in our portfolio. It's all affordable housing. So it all has, all of the buildings have mortgages from HPD, in one case from the state. There are tax credit syndicators involved. So the first challenge that we gave to LISC is we said we want a loan to install solar panels, but we can't put a lien on the property. So we want you to give us money for real estate, but we can't, it can't be secured by the property. So LISC came up, so this is the generation of solar electricity, and LISC came up with a very innovative solution of securing the loan with the value of the electricity that is going to be generated. So a very innovative solution that really the LISC, we worked very hard with the LISC team, and they really came up with that one. So that sort of got us through one of the big challenges of financing this kind of energy efficiency improvement. Another big challenge of this project is that there were a few other entities involved. So in addition to HPD and the state housing agencies involved, we are also working with a private solar company called Sunrun, who have a very unique contracting structure and are actually going to own these solar arrays so that they can take advantage of the federal solar tax credits, which is another funding source in this deal. And so essentially, with that solar tax credit equity is one source, and then LISC is really the remainder. But LISC was also able to kind of sweeten this deal by bringing in a participating lender who is NYC. So really NYC and LISC are providing the loan capital, but LISC really originated the whole thing and really made it a seamless process. So this was a challenging, peculiar project, but I'm really grateful that we ended up working with LISC, because LISC really showed a lot of flexibility and innovation to get this done. And we think that this is the first, I shouldn't say we think, we know that this is really the first type of this structure working with this, what's called this solar services agreement structure, where the loan is going to be repaid, really by the savings from the electricity. So I'm really happy that we were able to execute on this, and it was a really great experience working with Arturo and his team.
Thanks so much, Peter. And I would like to thank Peter, of course, because if it weren't for our fantastic partners, we would not have loans to make. And, you know, a project like this requires a lot of problem solving, a great partner to work with. And so we've really appreciated your partnership in this. I also wanted to mention, thank you for bringing up the participation. That's something that LISC is, you know, as Brock mentioned, when there is a project or a loan that might be too big for us to do by ourselves, we are happy to participate with other lenders as well. So another project that we wanted to feature under the economic development umbrella is the Ozone Park Industrial Center in Queens, which was done with Greenpoint Manufacturing and Design Center, also another fantastic partner. And this was a New Markets Tax Credit project. So we at LISC have done a number of New Markets Tax Credit projects. So if you're looking for a leverage loan, please come talk with us about that. The Ozone Park Industrial Center is a project that's part of LISC New York City's Inclusive Creative Economy Fund. And that is a special fund that we had created for projects in the creative economy. You can find more about that on our website, and those loans have included a theater project as well as these maker spaces or industrial manufacturing spaces. So the loan on this project from LISC was actually a $2.9 million loan. Like many of the other projects we have done, it was in participation with other lenders, and this was part of the leverage loan that went into the New Markets Tax Credit structure. This project created 85,000 square feet of manufacturing space in Ozone Park in Queens. As far as we know, it has created 88 construction jobs. It's been leased up to a number of small businesses, including woodworking businesses, metalworking businesses, and we anticipate that when it's completely leased up, that it will have created 78 operating jobs. And with that, I'll turn it to you, Arturo, for technical assistance.
Thank you, Mai. So we're coming towards the end of our presentation, but there is one last thing that I would like to just mention here, and that is that LISC also has a technical assistance service component. Historically, we've worked with a lot of groups, both nonprofit, for-profit, to provide technical assistance when those groups either have issues with bandwidth, they need some extra capacity. What you see here is some of the areas in which LISC has historically been of assistance to these groups, whether it's preparing budgets and developing financing structures for new affordable housing projects, complete work with the developer to complete a low-income housing tax credit application, advocate for the project, and also restructure Y15 portfolios. And so we will work with groups towards that. I should say that that service is typically on a fee-for-service, depending on the complexity of the deal. But we would love to talk to anyone on the webinar if they feel a need for those services about what kind of assistance we could provide and any cost associated with it. So with that, I'd like to open it for some questions. We have a few minutes left in our allotted 1 hour. And I guess you could use the chat box. Ian, could you provide some guidance here as to what would be the best way for folks to pose any questions?
So I've gotten a couple of questions
Okay.
through the chat, and I also see a couple of questions in the Q&A box. One of them was actually about us providing our email addresses, so that's on the screen now. And there was also a question about where to get the slides, we will email this out to the participants who joined today. So you will be able to get a copy of the slides, and that includes our email addresses in there as well. I see a question here about specific term sheets for each product. Arturo, do you want to take that one?
If they could be a little bit more specific, are you looking for a term sheet for each one of the products, which we can send out to you? Again, please, reach out to us. If what you're interested in is to see the specific terms under each product, and we'll be more than happy to send something out to you.
I see a question for all of the panelists. The question is for 784 Cortland Manor, how did they win the bid through HPD? Can you explain more about how to get started selecting a site and how it works with HPD?
We applied for the initial request for qualifications that HPD put out back in 2015. And in 2016-17, when they released the sites, we looked at each of the different sites and to see what could be built on the sites, and consulted our development team, and then submitted a design and financing model to the city to determine, what we can build on it. And we were fortunately enough selected for that particular site in the Bronx.
Thank you so much. So we have another question here. If we were interested in technical assistance, who is the best person to reach out to?
You can reach out to me. Again, just drop me an email. We'll set up a call, talk a little bit about the project, what is it that you're looking, and see if those are services that are within our toolbox. We'll be more than happy to talk you through it.
Will you consider a small construction loan, $600,000 to $700,000 on a gutted 6-unit building?
With that information, I would say yes. The question, obviously there's a lot of follow-up questions. Are the 6 units affordable housing? But if the 6 units are affordable housing and you're looking for a construction loan, the answer is absolutely.
It looks like that's all the questions that we have so far. If you have any other questions, please type them into the chat. And all of our email addresses are here, so you're welcome to email us as well.
So, all right. So this brings us to the end of our presentation. I want to thank all of the attendees, our partners, Randy, Roland, Peter, my colleagues, Mai, Brock, Janet. Thank you all very much. Please do reach out if you have any questions, any follow-up. We'd love to hear from you. So with that, I say have a good day.
Thank you, everyone.
Thank you. Everybody have a good day. Be safe.
Take care.